Analysts say it's anybody's guess as to where the repo rate will go when the Reserve Bank's Monetary Policy Committee announces its decision tomorrow. But with inflation rising and the petrol price approaching 20 rand a litre, it's only a matter of time before the hiking cycle begins. Nickolaus Bauer previews tomorrow's decision.
Some analysts believe it's a foregone conclusion that Reserve Bank Governor Lesetja Kganyago will announce an interest rate hike this week, the first increase since November 2018.
If you look at the variables, like the price of oil, and the weaker currency, which was at 14.47 last time we had the MBC meeting, it's weaker by 7%, and the price of oil has gone up in that period. So, things are starting to shape up in a way that says the SARB cannot afford to hold interest rates lower any longer.
While others believe if it stays the same, it will be the last time the Reserve Bank leaves rates alone for several years to come.
The Reserve Bank's own quarterly projection model intimates that the repo rate needs to rise to 6.4% by the end of 2023, which essentially is guiding the Reserve Bank to consider raising the repo rate by 0.25% every single quarter between now and the end of 2023.
With a prime rate of 3.5%, interest rates are at the lowest they've been in decades. But that doesn't mean consumers are prepared for a hike.
Things are going to get worse. Nothing is going to be better. If they put interest rates, things are going to get very, very bad.
I recently took out loans, so obviously it will affect my overall budget. Study loans, also high interest rates, increasing interest rates impact my daily budget.
It's going to make living too hard. It's going to make it difficult because as is now, it's already hard to live. So if things go higher, I don't know how we'll manage.
I'm also going to suffer because I'm suffering now. So what about tomorrow? I don't see I can be rich tomorrow or have the money tomorrow.
I think the government really has a lot of thinking to do, and just hiking up interest rate and making the rich richer and the poor poorer does not on.
The Reserve Bank's main responsibility is to protect the economy against inflation. And it's up to the government to do the hard work at reforming the economy to improve growth and soak up unemployment.
There's no shortage of what we know, and the government has acknowledged that needs to be done. It's a question of giving it priority and not subjecting it to lechotlas and workshops.
Whichever way the MPC decision goes, South Africa is in for a rough ride in economic terms for the foreseeable future. Interest rates are just one ingredient in the recipe for financial success for any country. For Newzroom Afrika, Channel 405, I'm Nickolaus Bauer in Johannesburg.